welcome to eSuite Interviews. I'm very excited to be here today with Eric Bellomo. Eric's a research analyst at Pitchbook. He has a focus on gaming, e-commerce, and consumer retail. So today we'll be talking about some hot topics and trends impacting e-commerce businesses and what to expect this Q4 holiday season. Eric, great to have you here today. If you could just share a little bit about your background, what your role is at Pitchbook and kind of your day-to-day, that would be great.
Yeah. Thank you for having me. I look forward to this conversation every year. Can't believe it's been a whole 12 months since we spoke last. But yeah, I sit on Pitchbook's emerging technology research team. So I cover a few spaces within the kind of consumer orbit, if you will. As you mentioned, the gaming ecosystem for venture capital, e-commerce enablement, so back-end technology powering online commerce, also from the VC angle, and then private equity-backed traditional brick-and-mortar retail. So kind of run the gambit from physical to digital there. And Pitchbook's clients are all manner of investors, corporates, financial service providers, and the like. So my conversations with those folks kind of also range from ad hoc inquiries to research notes we've published to long form presentations on a specific category of technology. So never a dull moment, and lots to unpack here.
Yeah, great. Thanks for sharing. And Withum's a client at Pitchbook as well. And, we get a lot of market research from Pitchbook and definitely highly recommend. Eric, as we've seen in recent years, e-commerce market is highly saturated. It's hard to gain market share. If you're a new D2C business, customer loyalty, retention, it's becoming that much more challenging, with the amount of similar products and competition out there. From your perspective, how do you stay competitive in the D2C landscape and what is important from the consumer perspective?
Yeah. So it's a, spoiler alert, right? Very challenging time in the, again, consumer space writ large, intensely competitive. As you suggested, we have, lower barriers to entry on the technology side of the equation than ever, perhaps. On the product side, there's a degree of parity or interchangeability with a lot of the B2C businesses. The underlying privacy landscape continues to evolve, which has driven meaningfully elevated customer acquisition costs in recent years. Of course, budgetary constraints from consumers. This is all coalescing at the same time, really. And there's a few kind of knock-on effects that we see and hear about. The first of which is there's a kind of concentration of transactions with the largest retailers, the Walmarts and Amazons of the world. Of course, that's happened over time, but there's tailwinds to that dynamic. On the other side of the equation, from a startup VC perspective, there's a degree of capital scarcity at the moment. Of course, plenty of dry powder on the sidelines, but we've seen some big name investors rotate towards somewhat safer, if you will, industries. So that creates some, headwinds as well. And then a price battle, right? Shein and Temu and other fast fashion retailers are, offering rock bottom prices. And that's a whole, additional dynamic that retailers have to face. On the loyalty front, as we're kind of, I think, touching on here, one theme that comes up a lot in my conversations is siloed data and reconciling disparate data sources across marketing and loyalty data sets. And when done well, that synchronization can improve the visibility of customer interactions, sharper customer insights, improving personalization offerings, but it's not trivial to get there from a technology standpoint. And then kind of one degree on from there is more and more retailers are launching their own loyalty programs as this kind of emphasis on first party data, again, privacy landscape is increasing. And kind of one interesting thing there is, we're not talking about like an extra scoop of ice cream on your birthday or a piece of cheesecake, right? These are high value, VIP level experiences in a lot of cases. And, again, that just puts a lot of pressure on retailers to offer really discrete customer value or utility at the end of the day.
Right.
But, beyond just core loyalty programs, the fundamentals remain the same from my conversations. It's profitable growth, strong retention, refined channel strategies, kind of the real blocking and tackling of retail.
Right.
And at the risk of a long-winded answer here, maybe the last thing I'll add is, if a shopper is on your website rather than Amazon's, that's for a specific reason. There's a narrow window to convert, and the onus to identify that person, their motivation, and get them from A to B is as important as ever. So I think this kind of all plays around data, loyalty, retention, conversion, et cetera.
Yeah, it's amazing to me. You think of an e-commerce business, you think, company sells a product and, sends it to a customer, right? It's that simple, right? And you don't really, you peel back the onion, you kind of realize there's so much technology. You need to have a tech stack, in the back end and the front end of your system to sell products, to keep customer retention, customer loyalty. It's becoming that much more challenging, and a lot of our clients are using technology to support that, right? So kind of staying on that topic with technology, think of like augmented reality, AR, and providing customers an interactive shopping experience. One of the things I noted was that the number of AR devices expected in 2024 is 1.7 billion. Integrating AR features, can enhance the customer experience, customer loyalty. We've seen like brands like Google and Walmart already leveraging AR, try-on capabilities, just immersive customer, experience. In your experience, how can a brand leverage AR for just better customer engagement? And kind of what sort of trends are you seeing in the market, this upcoming year?
Yeah. So AR, VR, mixed reality, it's an interesting one, and it's been a big year on this front, right? It's obviously the big guys you mentioned, but Apple enters the mix this year. Meta has a few different versions of smart glasses. On the brand side of the equation, we continue to see brands kind of dabble with some of the more established use cases, right? Virtual try-on. I used that to try on a pair of glasses virtually the other day. So there is some discrete value here. And spatial computing, again, maybe one of the bigger terms of the year. Spatial commerce is perhaps a corollary there. I am of a couple different minds. I'm perhaps skeptical in the near term and more optimistic in the long term. You mentioned a kind of growing install base of devices there, but I think in the immediate future, I think the buzzwords from a consumer perspective are value and speed, utility, right? I think this kind of experiential, kind of novel technology shopping experience is a nice to have, right? A lot of people right now have tight budgets, holidays are expensive, and I think you're probably, again, most shoppers are worried about what their budgets look like. That's kind of the bear case in the near term. In the long term, though, my optimism is a little bit simpler, right? Wherever people and technology goes, commerce follows, and I think we saw that with the Apple demos, right? We're seeing storefronts there. When the company with the pin, a quick voice order of an Uber to transact for a ride, like commerce will follow. So wherever that adoption comes from, again, I think we'll see brands deliver value on that front, but I think it's a little bit of a nice to have in the near term. There's perhaps some second order tailwinds, if you will. So Shopify and Toby have a long-standing kind of affinity for AR and VR. So those pipes are probably getting built over time, and I think that we can also see a trend towards immersion in general and the kind of blurring of the lines between physical and digital shopping. Seems like every day or week there's another announcement about a brand trying Roblox or Fortnite. I saw Topgolf and Fortnite the other day, which right now it's kind of on the individual brand to experiment there, but the Shopify integration is perhaps going to smooth the way towards these immersive experiences. So I know that's, again, kind of 1 degree removed from headsets, if you will, but and again, another long answer here. I think there's an interesting parallel to consider on the gaming side of the equation, which is to say, also hyper competitive, also saturated on the content front. AR/VR has been pointed to as kind of the blue ocean kind of next platform shift for many years now. But the install base has been insufficient. There's been few incentives for developers to build there. Creates a bit of a chicken and the egg. And I don't see commerce being that better off in the near term. So maybe again, the last thing I'll add is from a venture funding perspective, we have a subsegment tracked for AR/VR technology. The high watermark there was about $350 million in funding. That was in 2022, and the subsequent 2 years have seen that effectively evaporate. So 2024, well below the median over the last decade, pacing right around 2014 levels of funding. So I think that kind of aligns with this idea of it's a nice to have, and we're seeing consumers and brands focus on discrete value in the near term rather than some of these experiential nice to haves, if you will.
Right. Yeah, it's an interesting concept to think about. On the technology standpoint, we see AI being used for various aspects of e-commerce marketing. Machine learning predicts shopping habits for customers based on browsing history, enabling personalized recommendations, upselling, cross-selling. We could probably speak, a bit about AI at length, but from your perspective, what AI-driven strategies can enhance marketing efforts for an e-commerce business? And are there any sort of must-to-have marketing tools a business needs to sort of adopt to stay competitive?
Yeah. Well, gosh, we've made it almost 12 minutes. It's probably the longest either of us have gone without talking about AI at length this year. So there's a lot to consider. I think there's on the marketing front some relatively kind of obvious, if you will, use cases in the near term. So infinite landing page variations, variations of all sorts of content modalities, audio, video, just images. I don't think that's too hard to see. Same thing, concepting end to end, I should say, from concept to approval. I think we're seeing brands continue to experiment there. As many do, my recommendation tends to be to experiment with as many tools as often as possible. And I think right now what we see is the interest and awareness is pretty well established. There's kind of, in many cases, a hurdle from full-on implementation, be that around data privacy concerns or just technical limitations. So it's not totally smooth sailing on the production grade implementation just yet, but I think that time to market is accelerating still. As far as use cases, perhaps one degree removed, again, ad copy, data analysis. These are all viable in the near term. I think there's code completion services are going to help all sorts of marketing integration use cases as well. I used to be a product manager back in the day before pivoting to research, and the biggest bottleneck there was just fingers on the keyboard. So efficiency gains there are going to be meaningful. But I think a lot of what we're talking about right now are, again, efficiency gains. I don't necessarily see a case just yet that we're going to get like liquid death level of creativity or originality. Ask me again when the next version of ChatGPT comes out. That may change. But I do think there's some kind of blocking and tackling use cases that will be grappled with now as well. So, product discoverability via large language models. So this AI search optimization, that's kind of a spin out of traditional SEO. That's going to take some time for brands to learn. System integrators, again, I think have a tailwind here with headless code completion services. So, I think that's kind of some of the near term considerations. Longer term, I think it's a good time to be thinking about, what does an individualized shopping experience look like? You and me landing on two different versions of the same kind of domain with different video pitching different product virtues to each of us based upon the first party data we've offered. I think that's a little bit more abstract, but it's time to be thinking about those things. other kind of edgy use cases, or edge as in kind of, 1 degree removed from the core experience, virtual influencers. I wrote a little piece about that not too long ago. So we'll have maybe more than just one little Michaela in the near term. But yeah, again, maybe just to kind of tie that together, right now I published a note on generative AI use cases in commerce. A lot of it's, again, efficiency gains, customer support. And we're seeing some of the big players integrate that technology, and it creates, it can create some, tough sales cycles, if you will, for startups who are working against, Shopify bringing these functions into their platform for little to no additional cost. So
Right.
We'll see how that startup incumbent dynamic plays out in marketing and use cases and beyond in the near term, but certainly fast evolving to say the least.
Right. Yeah. Needless to say, it's got to be part of the conversation and the strategy, and you have to be thinking about it, especially as the landscape's changing a little bit. Great.
Absolutely.
Yeah, we kind of talked about the sort of the budget conscious consumer, right? And inflation and rising living costs have been lingering issues throughout 2024, and consumers are just more budget conscious. With interest rates being cut recently and expected to continue to decline in 2025. Unemployment rates low, hovering around 4%. How do you foresee consumer behavior and consumer spend being impacted, in this Q4 2024, and beyond?
Yeah. Well, a few things on our radar. Again, we expect it to be a big holiday season. Something around $250 billion in spend, I think, is on the table. I think we could also see a 60-40 split on mobile shopping as well, being feasible. But the budget and financial constraints are not trivial here. Inflation's headed in the right direction. Employment numbers have been strong recently, but credit card debt delinquencies are trending upwards, and there could be more upward pressure there on news, I believe it was last week, about potential caps on late fees. So card issuers are going to look for that revenue elsewhere. So that could push consumers towards, be it buy now, pay later, or other flexible payment options. I think all of that's going to be on the table for both brands and shoppers. Again, with that $250 billion spend, we're going to see returns continue to be an issue. We're tracking some interesting startups in the reverse logistics space, but it's more than just a technology issue. So I think that's going to continue to be a bit of an albatross in retail. Another kind of dynamic, again, we've touched on a little bit here, is speed and time to discovery. And I think we're starting to see that with the shift from like keyword-based searches to intent-based discovery. Walmart's been pretty active there. So in other words, driving down that research time. Again, considering that if someone's on your site, not Amazon's, that time to conversion is critical. So these are all kind of value adds to the shopper. But the long and the short of it is, I think we're going to see some big spending numbers, and it's not going to be without its economic constraints, be that on the technology or consumer side.
Right. Yeah, I'm certainly looking forward to seeing the results and seeing how the year shakes out, how our clients do. But certainly, consumers are a little bit more budget conscious, and we'll kind of we've seen that trend in 2024, and we'll kind of see how it shakes out towards the end of the year. So you just given the landscape, what are companies doing to stay, drive sales and profitability? We talk to a lot of clients, and we're seeing buyers focusing on more of those value-driven purchases, kind of like what you were saying earlier. Seeking discounts, promotions. Clients are bundling their products to make it more of a value add, right? And then we're seeing the promotional season start earlier, right? We're not waiting till Black Friday anymore. Nowadays, you have Amazon Prime Day, in October, right? And then other big retailers, pushing their promotions a lot earlier. What other sort of similar trends are you seeing? You mentioned flexible payment plans like buy now, pay later. Are you seeing any sort of similar trends to bring things forward, promotional season forward, or, how are companies staying profitable, driving sales, just given that the consumer, spend is a little bit different?
Yeah. Well, Yeah, so number one, agree on all of those levers, if you will. I hear a lot of the same from our conversations. I think another interesting kind of thread there is, a lot of these changes or evolutions take place over time as well. So this focus on value centricity has been, here for the better part of a year. We're seeing, I think brands start to really think about the level of technology overhead they need. Of course, a lot of what we're talking about here is technology driven, but I think there was a class of B2C brands that came of age in the aughts and used a lot of technology to differentiate their businesses. And I think we've started to see a shift in the other direction, which is to say, lower technology overhead, fewer data scientists on staff for some retailers, and embrace of Shopify, for example, as just a more nimble solution. So I think that's an emphasis on profitability to a certain extent that's unfolded over time as well. Again, I think in this AI era, we're continuing to see a lot of emphasis placed on experimentation, testing, optimization. On the bigger, larger retailer side of the equation, an eye towards additional revenue pools continues to be there. And I think the questions I get on that front are a lot around retail media networks. So continues to be a kind of a topical area with a more favorable margin profile there. We see a technology stack on that front continuing to formalize. Of course, it's Amazon and everybody else, but I think a lot of brands are still thinking about how to leverage that as an additional strategy. And I think maybe the last thing I'll add there is building visibility and connection to the end consumer in ways that may not have always been traditional for a brand. So I saw a headline today about Skechers posting a particularly strong quarter after strong partnerships and collaborations, and we've seen that investment play out over time as well. And Skechers it took some time to get there, but it's proven effective. So there's really not one size fits all. Here's no silver bullet, but calibrating these dials in ways that are actionable and quantifiable for a given brand and their end consumer are, again, continue to be very topical.
Right. Yeah, it's an interesting landscape now, right? We touched on a lot of topics, Eric. Any other emerging trends specific to Q4 that we haven't really touched on, or what can we expect from the overall e-com landscape as we end 2024 and then into 2025?
God, we've covered a lot of ground here, but maybe a few additional themes I'm keeping a pulse on. I'm interested to see how the AI spending conversation kind of trickles down from the C-suite, if you will. I'm sure you're hearing about some similar dynamics in the sense that there's kind of a prisoner's dilemma, for lack of a more elegant phrase, right, on needing to spend on AI, but that budget has to come from somewhere. And I'm curious to see if it impacts spending on, quote unquote, more traditional areas of the commerce tech stack. And furthermore, how platform vendors approach pricing there. So the difference between kind of bundled, again, just AI functionality at traditional seat-based pricing, or if we're going to see other platforms increase those price points to reflect the cost of this development. So anyway, I think that'll be really interesting to see. Obviously, a lot of this just Q4 and into 25 is going to come down to the health of the consumer and their perception of the economy's health. That's not trivial either. On the e-commerce front, I think the path towards expanding e-commerce's share of the retail pie is clicking along at a consistent pace. So we expect that to continue. And then maybe the other dynamic I'm keeping a pulse on, we kind of already touched on it. But if we have this, if I'm fortunate enough to have this conversation again in 25, I think I'll be curious to see what the level of immersion in shopping looks like is television going to become more shoppable, and our brand's going to really break out in some of these gaming, phygital, UGC ecosystems as that path kind of gets smoothed out. So again, never a dull moment. I think we'll have a lot to talk about in a year.
Yeah, absolutely. Yeah, you mentioned, the consumer's budget conscious, but it also kind of trickles to the companies, right? The funding market is a little challenging, and profitability is a big discussion point, right? It's no longer top line revenue growth at all costs, and it's interesting to see some clients, cutting the fat or going lean and mean, right? To kind of meet those benchmarks, meet their goals for profitability. But AI technology, you always need a tech stack, and how much are you willing to spend on that, right? So it's going to be interesting to see what vendors do and what companies do to stay competitive. Really appreciate the time. I think we had some great insights here. Touched on a lot of different things. And certainly looking forward to another update as we end the year and see where things shake out. But Eric, any last words, or what's the best way for any listeners to get in touch with you, whether it's LinkedIn, email, anything you want to share there?
Yeah, no, I appreciate the opportunity to be here and ramble through a whole lot of interesting trends. Feel free to reach out via email. It's first.last eric.bellomo@pitchbook.com. I'm pretty responsive there. And then same thing, LinkedIn, pretty active on that platform primarily. So again, just Eric Bellomo. So again, appreciate the opportunity to be here and talk about a lot of really critical and emerging trends in the commerce retail space. So thank you for the time.
Awesome. Thanks, Eric. Appreciate it.
All right. One.